Hello, everybody. Good evening. So, I hope you had a good day today. So, today we are going to start a new topic. And this topic is again one of the most important topics in investment banking, in economics, as well as in the entire banking system of any country. So, today we are going to study about money market, about monetary policy, about fiscal policy, and how it is relatable to money supply of the country and how it is relatable with the inflation of the country. So agenda for the day would be monetary policy and its effects on investments, banking system, money supply, and inflation. All these things we are going to discuss today. Now, it won't be wrong if I say that this is the principal concept, core concept, and the backbone of investment banking as well, economics, as well as the banking system. How? Let's give you a present example for this. If the interest rates are changed by the Fed in USA, it has a huge impact in the all central banks of all the countries. The recent example is RBI. If Fed increases the interest rates in America, RBI also tries to replicate in the country, and this has, you know, effect in all the investment tools and uh, all the investment uh, instruments, FT savings, FTs, RDs, stock market, bonds, future options, premiums of future options. So it has impact throughout. So today we are going to discuss all these things. Now, before I start this topic, you know, these questions must have arisen in your mind multiple times. For example, what is money market? What is debt market? Basically, money market is considered as a sub part of debt market. Now, when you were small, uh, you might have gone very curious about this question: who prints the currency and how the currency is being printed? What is the criteria of printing the currency? And if government can print the currency, why not to print currency and distribute to all the people? So it will straight away eliminate all the poverty from the country, right? So it's a very curious question. A person should have, should always ask from himself, even he's not he's from finance background or not, that who prints this currency and what is the logic behind this. And if government is printing the currency and if it is so simple, then why not, government prints the currency and distributes to the citizens of the nation? It will really eradicate the poverty. It will really eradicate all the basic economical and financial problems of the country, right? Now, the next question that should also come in your mind, you might have heard this term before as well: fiscal policy, monetary policy. What is the difference between these two things? So, we are going to discuss today these all things in quite detail and quite in a conceptual manner. And apart from this, one more very, very, very crucial term in all the policy making, in all economics, in all investment banking, that inflation is rising or inflation is decreasing. As we had discussed in the previous classes as well, if inflation goes up, guys, actually in investment banking, if I say that we are competing with inflation. So if I'm investing my money somewhere in any instrument, any investment instrument, it could be FT, RD, PPF, gold, stock market, we are competing with inflation. So that's why we really need to understand what is inflation, what are the things which impacts the inflation, and how inflation is controlled, who controls it, and how it is being controlled. And you just, again, it's a very curious question: how government of India or RBI sitting in Delhi or Mumbai regulates the inflation throughout the country, regardless of the location, geographical location. It could be Jammu Kashmir, it could be Nagaland, it could be Gujarat, it could be Kerala, north, south, east, west. How RBI sitting at one place controls the entire inflation of the country? There must be something. There must be some tools which they are using. So today we are going to discuss this thing, and we are going to, again, going to dig deep into this thing, that how inflation impacts the investments and what are the factors which impacts inflation and which would further impact the investments. We are going to discuss this thing as well today. And apart from this, then we'll go into the interest rates. Means what are interest rates, what is repo, reverse repo, SLR, CRR, and what is money supply, and well, what happens when these rates are altered by central banks, and what exactly happens. So we are going to discuss this thing as well. And at last, if we are discussing all these things, then we are going to discuss about conceptually, not theoretically or not definition wise, means what is the exact role of IMF, what is the exact role of central banks, conceptually, practically, how what they do basically. And with IMF, we'll try to relate it with World Bank as well. Means what is the role of that? Because these organizations play a big role. And being in investment banking, I had given emphasis on this thing before as well multiple times. That investment banking is not just reading one subject. It is a convergence of all the subjects. If I say you must have knowledge of accounting, you must have knowledge of geopolitics, you must have the knowledge of economics, you must have knowledge of some environment and geographical things. Politics as well play a big role. So investment banker need to have knowledge of wide subjects. And all the subjects are very relatable to each other when it comes to investment banking. You will be handling crores and crores of rupee of your clients, basically. So today, apart from this, how we will be relating this practically. We will be reading few newspaper articles, and we will try to see inflation rates in India, Sri Lanka, Pakistan, and what would happen if inflation rate goes up and down, and what will be the impact on our investment. It could be a possibility that we put such huge amount of money, our hard earned money in stock markets or in multiple instruments, but inflation is really, inflation can really eat away the returns, or inflation is really competing with it. So we have to keep this thing in our mind as well. WPI, CPI, what they are exactly, we'll see that. Practically, how governments try to regulate these things. Fiscal policy, economic survey. Economic survey is a very important document, guys. It comes that we will be discussing when it comes, but whenever it comes, it gives the picture of the entire country, how the country is moving. Then we'll again go for monetary policy, and we'll discuss whether the inflation is good or bad. Now, before I proceed further, there are few newspaper headlines and cuttings which I had just brought, and this is today's newspaper, 23rd August 2024, latest one. So my first question from all of you, practically I want to relate it, that you might have heard these things, interest rates are going up, interest rates are going down. This is for America basically. Huh? Now Fed is trying to cut the rates down. What is Fed? What is rate? What rates they are talking about? What rates? What interest rate they are talking about? There are so many rates. Now what happens? And which rate Feds basically change? And what happens when they change the rates? Does it has any impact in the world, as per se, world's economy? Means it's a big thing basically. It's a big news, if I say. Now, what will happen if the interest rates are cut down? What will happen if the interest rate goes up? So we all, we are going to discuss this. And what do you mean by dovish monetary policy? What do you mean by hawkish monetary policy? We are going to discuss it today. So actually, the thing is that monetary policy is also of multiple types. There are of many types as per the usage. What government tends to do, what government is planning to do, basically. So that is the use of monetary policy. And then I will try to relate this thing over here as well. That what RBI does when the interest rate of the Fed goes up. So it's the news from RBI as well. So RBI is also planning to do something with interest rate. And why the topic of inflation is coming over here. Why we are studying inflation, the topic of inflation within this chapter. There must be some linkage with this, right? So this is something related to monetary policy. These all articles were related to monetary policy, right? Now, you might have, you might be thinking, monetary is something as the word itself suggests you it's something related to money, right? So fine, I got your point that it must be related to some kind of money. then what is the use of, then if I say if it is something related to money, then what is fiscal policy? So it's a cutting for fiscal policy. You know, India finance minister is trying to, cut income tax, or they are going to make a policy on income tax. Is income tax good or bad? So this is a cutting related to fiscal policy. So see, the finance minister is standing over here, and when you were, we were reading the article on monetary policy, we were reading about Federal Bank of USA, and we were reading about RBI. So it is a one and the foremost difference between both the policies, that you will always remember this thing now. Monetary means something related to money, right? As the English word, literal meaning itself suggesting you. Fiscal, we are going to just discuss in a moment. Now, before I proceed further, I want you to think what could be the difference between both of them. Means how they are relatable. Is there any use of, both, or does they play any role? Should monetary policy be, in different direction? Fiscal policy should be in different direction, or they should be aligned perfectly for the growth of the nation? I mean, what should be the entire, you can say, principle or thought behind both of them? I want you to think. I want you to think on this, how a country is regulated. Now, guys, we are going to study macroeconomics, microeconomics, and the regulation of the entire world and the countries. It's very conceptual, right? So please think, take your time, think what could be the difference between monetary policy and fiscal policy, and how it is relatable, or they both have different directions. It could be in any direction. Take your time, and then we'll discuss it in a moment. All right. So before we proceed further, it's a story time. Let me give you a small story. All right. There is Mr. A. Mr. A is a new businessman. Mr. A is a restaurant owner. Mr. A is a startup owner. He is just, starting a business, right? So what are the ways Mr. A can raise money? Means, for example, I am a businessman. I have a plan. I have an idea to start a new business. But now I want to have some money, because I am not having that much money. I do have a good idea, but no money. So if a person not having any idea, sorry, if a person not having any money but an idea, can I start a business? If yes, then from where I can get the money? And if no, then I should, keep on doing my job regularly. Now, to answer this question, I have a story, right? The first thing I can do, I can go to my parents, ask money from them, or I can go to my friends, I can go to my relatives. Guys, this story is the crux of investment banking, if I say straight away. This story will come again and again in the different parts of the different chapters, different concepts. This is entire investment banking, right? So I need money, right? So there will be a person who will be needing money. There will be a second party who will be giving money. So, there is a transaction between both the people. So I am a businessman. I need money. The first thing I can do, I can go to my parents, ask money from them, and I may not need to return money to my dad. He may say, use this money the way you want, and I don't even have to give the money back, and I don't even have to pay the interest as well. Same goes with friends sometimes, and you may have to return the money to relatives, but there is no hard and fast rule over here. So this is the first way I can raise money. So I can raise money from my family, my friends, right? And the second way of raising money would be from the bank. I can raise money from a bank in terms of loan. Now, loan terms and conditions may be negotiated, but if I say, you have to pay interest around more than 10%, 12%, 14%, depending upon the terms and condition, but you have to pay the money back. You can't say paise nahi hai. You can't say you don't have the money. You have to pay the money back, right? So when it comes to bank, two things. One, you have to pay the interest. That interest may range from 10%, 12, 14, depending upon the negotiations. It can be decreased further if you negotiate well. Because for businessmen, terms and conditions can be can become flexible on negotiations. Now, but the time period to return could be 10 years, 20 years, 30, 40 years, maybe 50 years as well. Sometimes the loans keep on going the next generation as well. So over here, you have to pay interest, but the time is quite wide. Similarly, when you take a loan from bank to buy a home, to buy a house, sometimes you take 30 years, 40 years to pay back that loan. So term period is quite long. But over here, interest rates are greater than 10%. Why to pay 10%, right? So, interest rates are greater than 10% and time is long time. There is a long time in hand. So there is no need, there is no rush to pay, to early. But if you pay early, it's fine. Now coming to debt market, it's a new it's an instrument. As the name itself suggests you debt. Debt is something, kind of loan, debt market. But over here, there's a small difference, guys. Let me tell you the difference. The difference is that this time I'm going to public. I'm going to the citizens of my district, of my city, or all, citizen of India, and I'm going to issue a piece of paper, a promissory note, right? And I'm going to take money from 100 people, 200 people, or 1 lakh people, depending how much money I want. The best example, if I say, I can take 1 lakh rupee from one person, or I can take one rupee from 1 lakh. Taking one rupee from 1 lakh people is quite easy instead of taking 1 lakh rupee from one person. So if the amount which I require is very high, means from 1 lakh to 100 crores or more than that, then it's better to reach multiple people. The debt market and equity market comes, handy in that thing. They help us out in that thing. Debt market in very easy terms, if I tell you, finance is very easy, guys. You need to just relate the things. Debt market is again, I'm taking a loan, but this time not from bank, from people. I'm going to public, taking loan, but I'm giving a promissory note, a promise. Over here, where I will be writing that I, Pranay Vyas, will be returning your money within 2 years, 3 years, 5 years, and I will pay this much interest. This is a debt market, and this piece of paper is basically a bond in very, very simple terms, right? We will be discussing bonds in quite detail in future classes. But till now, I want you to have an idea means how bonds work and what is debt market and money market and how the government securities will work. So you need to have this clarity in your mind. Now, debt market, as a name suggesting, literal name suggesting you, it is something loan, but the loan taken from the public with exchange of a promise, with a promissory note. Promissory note is a piece of paper where I will be mentioning that I, Pranay Vyas, promise you that I will pay your money back at this much interest. So, debt market, the difference between the bank loan and the debt market is that I have to pay less interest, 5%, 5 to 7%. It's good. Being a businessman, if I can get money at the rate of 5 to 7%, it's good for me. Why to pay 10 to 14% to a bank when I can get the same amount of money in loans, in bonds, in terms of bonds? But there is only one difference, that bonds come with a shorter lifespan. Means I have to return money in 5, 10 years. Because it's very less actually, 2 years, 3 years, 5 years. So there is only a flaw, only a difference, that bank loan can go up to a very long period of time, whereas bond you have to return it back. There are some bonds which go for a long period of time. They're not advisable actually. And there are some bonds which are less than 1 year, which is money market. We are just going to touch that now. But just imagine, I'm just giving you a clarity and overview. The debt market is also a tool of raising money. So being a restaurant owner, being a new startup, entrepreneur, a person who is just starting a business, it's again a way for me to raise money. So I can raise money from this way as well. Again, it's a very good way of raising money, and it's a good way to execute your ideas. Now you don't have an excuse that, sir, we have an idea but we don't have the money. I'm giving you the ways. So in investment banking, we are just going to study this thing only, that how to raise money. This is from the perspective of an entrepreneur or businessman, and from the investment bank, from an investor, how to invest money. So there will be always two people. First one, there will be always two people, one person who will always require money. It could be a business entity, it could be government entity, it could be a businessman, local or international. There will be another entity who will be providing money to this. So this entity will be an investor. It could be a bank, again, it could be a government, or it could be a general public like us. So debt market and equity market are basically dealing with public. When I am raising money, large number of people, it is quite simple for me to raise money. Again, repeating my example, that it is difficult to raise 1 crore rupee from 5 10 people, whereas it is quite easy to raise 1 2 3 crore rupee from 100,000, 10,000, 1 lakh people. It is very easy because they have to pay only 1,000, 2,000 rupees. It's easy on their pocket. But it's really heavy on the pocket when you have to pay 100, 1 crore rupee, or 10 lakhs rupees. It's really very difficult. So we have to think in both the perspectives, from the perspective of a businessman and from the perspective of investor as well, because investor needs returns, right? Now coming to equity. Equity is something when I am raising money from public and I am exchanging and I am giving my ownership to the people who are investors. यहाँ पे the only difference over here is that you don't need to pay money, no need to pay back, no payback. So we are going to discuss when you have to pay. So we are going to discuss when we have to pay the money. There are some some conditions when you're going bankrupt and all these things. We are going to discuss in equity chapter. But till now, just keep in mind that I can take money from people and I need not to pay it back, and I can use it the way I like. Though I have to give quarterly reports, but if I give you in very simple terms, many a time Ashneer Grover also said this thing: raising money from people, even if I keep in a bank account, I can earn money from there, right? So it is my choice. Though we will be discussing these things in the equity chapter, but the thing is that equity is when I am going to public to raise funds, and to raise funds, I need not to give it back. So I can use it for my expansion. Now, from a perspective of businessman, see, I have so many tools. Now, we will be studying all these tools in quite detail, one by one. What are the ways, instruments from raising, by which we can raise the money. So it is very interesting, guys. You just need to have a good idea. Money and investments will automatically come in. This is the real job of an investment banker. We make both the people meet, the the person who requires money, the businessman who requires money, or it could be a government institution or bank who requires money, and the people or an individual or a government entity or a government institute or any public institute who have good amount of funding. We make both the parties meet, money requirer and the money giver, both of them, we make them meet. This is the main crux role of investment banker basically. Now, coming back to the topic, why this thing? I gave you an explanation because over here we are going to discuss money market. I told you monetary policy, as a literal name suggesting you, monetary policy is something relatable to money, and we are going to regulate this money. So we are going to discuss this in this topic. So first, debt market. I told you, debt is something when I am raising money from people, from public, but this time I'm giving a promissory note that I'm going to return your money back. But on the lighter note, I would like to say, this is a very good saying, that promises are meant to be broken, and it is valid over here as well. That thing we are going to discuss in the next classes when we'll go into detail into debt market only. That yes, there are chances when the bonds and the companies who issue bonds they also default. But chalo, over here we are not going to be pessimistic right now. So we are going to see the difference first of all. What is a debt market and what is a money market? How they are relatable to each other, basically.